Last time we listed what I own. What does this AI analysis button do?
It studies every stock on your list and gives each one a verdict. Is it healthy, does it need watching, or is something wrong? And for each one it shows you exactly why.
Does an AI decide that?
No, and this is important. The verdict is worked out by fixed rules in code, not by a language model. The AI can describe things in plain words, but it never decides your color and never computes a number. That is deliberate. Rules can be checked, a model's opinion cannot.
There it is. Each stock has a colored word.
5 possible verdicts. Strong means the evidence is clearly in its favor. Okay means nothing is wrong. Observe means something deserves your attention. Critical means act now, read it today.
And the fifth?
Unknown. It means we did not have enough information to judge honestly. Notice it is its own verdict, we do not quietly call it okay. A guess dressed as an answer is worse than saying we do not know.
There is a percentage in the corner too.
That is data coverage, how much of the intended evidence we actually had. We will open that up properly in a moment.
I clicked details and got a whole dialog.
Read the reason lines first. Each is one plain sentence about one thing we found trading below its 200-day average, results due in 9 days, negative news cluster, and so on.
They are in some order?
Most important first. If you only read one line, read the top one.
These bars are new to me.
This is the arithmetic behind the color. 7 rule groups: trend, momentum, catalyst, news, valuation, and fundamentals, sector, and your own position. Each shows the points it added or removed.
Green to the right, red to the left.
Right is in the stock's favor, left is against. And they add up to the total shown at the top, so you can check are working yourself. That is the point of showing it.
This row says no data instead of a bar.
That group had nothing to judge on. Look carefully, it does not say 0. 0 would mean we looked and found it neutral. No data means we could not look at all. Those are very different, and mixing them up would mislead you.
And this list with ticks?
This is what the verdict was based on. 6 sources: price history, fundamentals, news, events, sector, sector trend. A tick means we had it. A warning means we did not.
Why does that matter to me?
Because otherwise a blank field is ambiguous. If the news line is empty, does this stock genuinely have no news, or did our feed fail? Without this strip you cannot tell, and if you cannot tell, you cannot trust any number on the page. So read the percentage as confidence in the evidence base, not in the stock. 80% coverage with a critical verdict is a strong warning. 40% coverage means read it, but no, it is a partial picture. Below that, the raw evidence. The technical picture last close, RSI, the 50 and 200-day averages, the 52-week high and how far below it you are. Then the fundamentals, the analyst's average target, how many analysts cover it, debt against equity, earnings growth. Then the actual news headlines we read, and any results date or big deal we found.
So I can go through every stock like this, one by one?
That is exactly how it is meant to be used. Start with anything critical, then observe, and skim the rest.
There is a separate alerts box.
The short list of things worth acting on, pulled out of all those verdicts so you do not have to hunt. Red first, then amber.
Mine says all clear.
Then there is genuinely nothing urgent. An empty alerts panel is a good result, not a broken one.
I clicked the row itself and the chart changed.
Selecting a stock drives the whole page. The chart shows that stock's price history, so you can see with your own eyes what the verdict is describing.
So if it says trading below its 200-day average, I can check?
You should. Never take a verdict on trust when the chart is one click away and it also highlights that stock slice in the sector chart below.
The first chart is a ring by sector.
How your money is spread across industries. Each slice is one sector, sized by the rupees you invested there.
Why does that matter?
Because if most of your money sits in one industry, one piece of bad news for that industry hits your whole portfolio at once even though you own 10 different companies. The chart warns you above 40% in a single sector.
And this gray slice marked unclassified?
Stocks whose sector we could not confirm. It is gray on purpose, it sits last, and it is left out of the concentration warning because calling an unknown group a sector would produce a warning about something that is not real.
This next one has bars going both ways from a center line.
Profit contribution. It answers the question the ring cannot, which holdings actually made or lost you money. Right is rupees earned, left is rupees lost, sorted by impact.
Why is that different from the ring?
The ring shows where your money sits. This shows what your money did. A big holding that has gone nowhere dominates the ring and barely registers here, and a small one that collapsed is invisible in the ring but obvious here.
The scale is written at the top.
Always. A bar's length is a real measured amount, never a decoration, so the scale is stated and you can read the size for yourself.
Now a risk panel with 3 boxes.
Largest holding: how much of everything rides on one company, against a guide of 25%. Top 5: how much sits in just 5 names. And spread, which is a single number for how evenly your money is divided.
The spread number means nothing to me on its own.
Which is why we print its reference next to it, what the number would be if your money were spread perfectly evenly across the same count of stocks. Higher than that means more concentrated. A number without something to compare it to is not information. Below, the same idea by sector, each bar against its own guideline. And notice it says measured over classified holdings, only the unknown ones are excluded, and it tells you how many.
Last one, this single bar at the top.
Your whole portfolio's health in one line, weighted by money. Each colored segment is the share of your invested rupees sitting in that verdict.
Why weighted by money?
Because counting stocks would lie to you. 2 critical stocks out of 10 sounds like 20% trouble, but if those 2 hold half your money, the real number is 50. This bar tells you the truth about your exposure.
And the gray not judged part?
Money we could not form a view on. It gets its own segment and its own figure, never quietly counted as healthy.
A few last questions. How often should I run this?
Once a week is plenty for long-term holdings, and again whenever you are thinking of adding or selling. The results are cached for a while, so clicking repeatedly will not change anything.
If it says critical, should I sell?
It is not telling you to. Critical means read this one today and understand why. The decision stays yours. This platform does not give buy or sell advice on your demat holdings, and it never will.
And why do some stocks show far less detail than others?
Coverage. Large companies have analysts, news, and clean history. A small one may have none of that, so its coverage percentage is low and its verdict rests on fewer inputs. The page tells you that instead of hiding it, and that is exactly what lets you trust the ones that do have full coverage.